Tax Time 2020. A lot has happened in the 2019-20 financial year. Here's a quick outline of just some of the changes to keep in mind before lodging your tax return. The big news was the raft of measures introduced from March 2020 onwards in response to the impact of the coronavirus on individuals and businesses. Individuals have been able to get early access to their superannuation. These special super withdrawals are not assessable income and don't need to be included in your tax return. From the 1st of March 2020 there's a new flat rate method of calculating home office expenses. Use of this method is optional. Under the new method, a flat rate of 80 cents can be claimed for each hour you work from home to cover all deductible running expenses. For businesses, the big news is that from the 12th of March 2020 the instant asset write-off threshold is increased to $150,000, up from $30,000, and it covers businesses with aggregated turnover of up to $500 million, up from $50 million. Businesses otherwise with aggregated turnover of less than $500 million are able to accelerate their depreciation deductions on qualifying new business assets. JobKeeper payments received by businesses must be declared as income. JobKeeper payments do not include GST and should be separately identified from regular business GST income. Wages and salaries paid to employees under the JobKeeper scheme are taxed as usual. Cash flow boost payments for employers are also free of GST and are not included in taxable income. In other tax changes, the tax offset for net medical expenses is no longer available. This applies from the 1st of July 2019. And also starting from the 1st of July 2019 you can no longer claim tax deductions for the cost of holding vacant non-income producing land. This includes loan interest, rates, taxes and maintenance costs. However, vacant land used in business is excluded from the new rules. And a further exemption applies if the land is vacant because of an exceptional circumstance arising in the last 3 years. That could be, for example, a natural disaster like fire or flood, or substantial building defects. In December 2019 the law was changed to eliminate the capital gains exemption on residences owned by foreign residents. The law takes effect from the 9th of May 2017, but properties already owned at that date are excluded from the new rules until the 30th of June 2020. For self-managed super funds the law has been tightened to ensure that non-arm's length income includes income from arrangements in which the parties were not dealing with each at arm's length. Non-arm's length income is taxed at a penalty rate, and the measures have been backdated to the 1st of July 2018. And family trusts which are treated as closely held trusts have had a penalty tax imposed on circular distributions. Circular distributions are also called a round robin and typically refer to situations where trust distributions flow through a chain of trusts, potentially avoiding tax. Most employers are now reporting payroll information through the single Touch Payroll system. As a result, employers no longer need to give their employees payment summaries or lodge a payment summary annual report to the tax office. Instead, the payroll must be finalized through the STP software. This must be done by the 31st of July where there's 19 or fewer employees, and the 14th of July otherwise. The reported information subsequently flows from the tax office into individuals' electronic tax returns available in the MyGov portal, and is also available to accountants via the online lodgement systems. There is an exemption from the single Touch Payroll system for closely held employees. This includes family members, directors or shareholders of a company, or beneficiaries of a trust. The exemption has been extended from the 1st of July 2020 to the 1st of July 2021. That's a wrap on most of the changes affecting individuals and small businesses. If you need assistance with any of these or other matters, please don't hesitate to get in touch. Rob Murphy and his team at Murphy Sherry & Co. of Kalamunda, accountants, and tax agents, have been providing professional public accounting, taxation and business services in the Perth area for over 45 years. They offer practical guidance, advice and planning assistance for small businesses, entrepreneurs and their families. They are online at msco.com.au or phone 08 9274 0655.